All right, let's dive into a massive deal that's making waves in the West African mining scene. We're talking about a government shelling out a huge amount of money, over $100 million, to get a bigger slice of one of its own major gold mines. So let's break down exactly what's going on here.
So this really brings up a fascinating question, right? What actually happens when a government decides, hey, we want to own more of our own natural resources? And this massive new deal happening in Burkina Faso, it puts that question right at the heart of the story.
Okay, so let's get right into the announcement, because this is way more than just your typical corporate press release. No, this is a move that has huge implications, not just for a publicly traded company, but for an entire nation's economy.
And the company right in the middle of all this is West African Resources. You'll find them listed on the Australian Securities Exchange. They're a really big gold producer in that part of the world, and all their recent talks with the government have just led to this landmark official decree. And here it is, the heart of the deal. Based on this brand new government decree, the state of Burkina Faso is officially buying an extra 25% of the Kiaka Gold operation. I mean, this is a massive move. It completely changes the ownership structure of one of the most critical mining assets in the whole region. So you might be asking, who are the key players making this all happen? Well, to really get a grip on this deal, you've got to understand the two main parties sitting across the table from each other. You've got the corporation, and you've got the state. All right, so on one side of the table, you have West African Resources. That's the Australian company, publicly traded, the ones actually running the mine. And on the other side, you've got SOPMIB. It's a bit of a mouthful, but what you really need to know is that it's the state-owned company that represents the government's interests. So you've got the operator, and you've got the sovereign partner. Okay, so we've got the who. Now let's talk about the how much. It's time to follow the money. What's this stake actually worth, and what are the numbers behind this deal? So get this, the government is grabbing an additional 25% stake. This isn't just some tiny tweak to the numbers. We're talking about a really substantial jump in its ownership of what is an incredibly valuable mine. So, what's the price tag for a quarter of a gold mine? Well, the government is paying 70 billion CFA francs. Now that translates to about 175 million Australian dollars. And for West African Resources, that is just a massive injection of cash right onto their balance sheet. Okay, so WAF is about to get a boatload of cash. What are they going to do with it? Well, this is where things get really interesting, especially if you're an investor. The company has basically said they're planning to issue what's called a special dividend. Think of it as a one-time bonus payment to their shareholders. They're essentially taking the profits from this big sale and handing them right back. Now, a deal this big doesn't just happen overnight with a simple handshake, right? There are steps involved. So what needs to happen next to make this all official? Let's take a look at the road ahead. It really breaks down into 3 key steps. First things first, both sides have to sit down and hammer out all the fine print, finalize all the detailed terms of the acquisition. The goal is to get all of that signed, sealed, and delivered by the end of 2026. Once that's done, the cash gets wired over, and WAF can move forward with their plan to distribute that money to their shareholders. And the company's executive chairman, Richard Hyde, had something interesting to say about all this. He pointed out that this official decree removes uncertainty about what the government was planning to do. And that is a huge deal for investors, because if there's one thing markets can't stand, it's uncertainty. He also doubled down on the plan to return that cash to shareholders, framing this whole thing as a big win for the company. All right, so to really understand what's happening, we need to talk about what this deal is, but just as importantly, what it isn't. Context is absolutely key here, so let's clear up a few important points. First off, and this is a big one, this deal is only about the Kiaka mine. WAF's other major operations, like Sanbrado and Toiga, totally unaffected. That's really important to know. Also, this announcement gave the market enough clarity that the company's stock, which was on a trading halt, could start trading again. And the cherry on top, because of this deal, WAF is now expecting to report a record-breaking amount of cash on hand. Pretty significant. Okay, and just before we finish up, we have to put up our standard disclaimer. Just a reminder that this is for informational purposes only. We're breaking down the news, but this is absolutely not financial or investment advice. Please always do your own research before making any decisions. So when you step back and look at it, this whole deal is just a fascinating example of a government and a private company partnering up in the mining world. We've gone through the what, the who, and the how, but it leaves you with a bigger question, doesn't it?
Are these kinds of partnerships the future? Is it a win-win for both a country's citizens and a company's shareholders? Or are there hidden risks we haven't talked about? What do you think? We'd genuinely love to hear your thoughts down in the comments. Thanks for tuning in.